Alright guys, welcome back to another video. In this one, we're going to be recapping this beautiful trade that I took on gold. I actually called this trade out to the audience right at this level right here as an entry, and if you took that entry from there, this would have been an amazing trade that would have yielded you one of the cleanest setups ever with almost zero drawdown on this, and even the entry I had also yielded me literally zero drawdown. This is a very simple way of trading. In this video, we're going to be breaking down everything from not a hype angle, but from a process angle of walking through macro headlines that mattered, the data that supported this move, and how I use the chart purely as confirmation to take these trades. For anybody new here, I call out all my trades at the start of the week with exactly what I'm looking at and why I'm looking at that, and then I recap all of it at the end of the week and make specific trade breakdowns per trade as needed. And again, if you're just starting day trading, I highly recommend looking into swing trading as there is a lot less stress, the entries are a lot cleaner and more forgiving, and just you become much more consistent in your overall trading. So I do want to start with the macro headlines on this, because before I even look at the chart here, the first thing I pay attention to is the overall headlines. And when I say macro headlines, I'm just talking about the news. You know, we're not looking at anything crazy here. We're looking at what is going on in the world at any given time. Obviously, during this period was a little bit of geopolitical risk, especially because of the Venezuela situation. So when you get headlines involving US military involvement, instability in oil producing regions, or just overall geopolitical escalation, markets don't immediately think buy stocks. They're thinking risk management, and that's where capital starts rotating into safe haven assets like gold. So why did the Venezuela situation matter for gold here? This wasn't about predicting war or panic. It was about understanding how markets react to the uncertainty of the situation. And that headline alone put the gold trade way on my radar. On top of the geopolitics, there's obviously that policy uncertainty. You know, there's mixed messaging from Fed speakers, growing questions about how restrictive policy really needs to be, and overall concerns over central bank credibility. So when confidence in policy direction weakness, along with the dollar softening, this really does benefit gold longs. Recapping, really all we had here was geopolitical risk and policy uncertainty. Those two alone give me a strong macro foundation for gold. Now, jumping out of the boring stuff and actually into the data, you're just going to hop over to Forex Factory. This is where I confirm the headlines, and honestly, with everything that came in, it really did confirm my bias. With JOLTS specifically, job openings is one of the biggest things I look at, with the expected forecast coming in at 7.61 million, coming in way under at 7.15 million. That is a really, really big one to me. It's a sign that the labor market is easing, and at this point, it's not really a coincidence, it's more of a pattern, because when you mix that in with ADP non-farm employment change, with a forecast of 49K coming in under at 41K, you know, this is a lot more of cooling labor, less pressure on rates, and it is way more supportive for gold. I will say with ADP, it wasn't catastrophic, but it does tell us the market labor strength isn't accelerating. Next, we had non-farm employment change, which also had a forecast of 66,000. We came in at 50K. Softer growth does keep that narrative alive that rates don't need to stay restricted forever, and gold does like this environment. So putting this all together, you know, headlines and data, you can see how this stacks properly with geopolitical risk from Venezuela, uncertainty around policy, and the cooling labor data that we have in here. This wasn't even a guess. This is more of a macro environment that is way supportive for gold longs. So obviously, going back over to the charts, when it comes down to a chart perspective, when I've already had a great bias, it really comes down to just a few things: a defined entry, clear invalidation, and a logical target, because the trade was backed by macro and data, so I don't need to micromanage it. I just let it do the work, and that's how it hit, and that's how we hit a clean TP. So I'll break it down from the perspective of the entry I actually called out first before I jump into my entry. So let's assume right there is where the entry was, and we'll put the stops right at these Asia lows right here, as I would have suggested prior. So with this trade in particular, we had this massive fall off on gold. Now, I think this was a bit oversold. I actually did want the break and retest right here and taking the shorts down to this area right here. We had a bunch of unmitigated lows and a couple of Asia lows as well. So for me already, I'm thinking, well, gold has already had a sharp sell-off. I'm going to start thinking about, is this going to continue down or is this going back up? So with the Venezuela situation in particular, that is the biggest thing. Once we started having talks about that, that is immediate, you know, rocket fuel for gold. So that's what I'm going to be looking for. So as you can see, we put in a low here, we put in a lower high and a lower low. At this point in time, we are bearish. This is more of where the anticipation comes in, because once we start breaking some internal structure right here, we form this area of interest right here when we have this high getting rejected off of and coming down. like this, and now we've respected this low, or the swing low. So once we've done something like this, at this point in time, I am starting to look for my long entry. We haven't shown exactly that we're going bullish just yet. Only on minor internal structure right here have I even seen the somewhat bullish signs. What I really do like is the rejection of this area right here, because if we didn't break it yet, but we're also not breaking the low, we're kind of in limbo. So this is where I start looking for the area of interest, which would be right here off this high. And then this is where I'm looking for the break and retest, because at a point like this, once this high is broken, now we're going bullish. This is no longer a lower high at this point. We've broken it, and we're going to make a higher high if we've respected this swing low. So with that being said, I just take a break and retest of the 50%, which was right here. The only reason I didn't take it from here is I didn't like exactly where the stops were, because I usually like putting it at the low before that. So that would be all the way down here, making this a 1.75 RR trade, considering we did have a gap up right here. I'm not a huge fan of the stop loss placement. Personally, I would have put it at this Asia low, but I said, you know what, I'm just gonna wait for more confirmation, and that is totally valid. I think a lot of swing traders will agree. You do have a lot more opportunity to wait for that perfect entry and get into at a point that you like. And with this trade in particular, we actually would have gotten close to the break-even point, but we actually did continue to the highs, which is awesome. So this would have been a clean, free trade with, you know, basically no drawdown. I was targeting all-time highs right here. I did say that I was a little bit on the fence because I don't like trading into the unknown. With this being all-time highs, with an Asia high right here and an unmitigated high to the left, this is a great target for me. You could have actually held this a lot longer for an extra 2 RR, which would have been nice personally, but I don't like targeting the unknown. You know, there's nothing to the left or that I can actually target. There's no structure there. So for me, there's no point in shooting without a target. So I'm happy to take off the full size right here. As you can see, actually, where we hit this TP, we had gapped up on like Sunday night, and I remember just seeing my phone say take profit hit, and you know, that was the end of the story. It was a very quick trade in particular. We can actually check. The trade duration on this was only 3 days and about 9 hours. Pretty easy execution on this. My entry in particular was a little bit more advanced. If we go into a lower time frame, you can actually see right here, we had about the same situation that we had over there, where we made an area of interest at these highs right here. We had a break. We didn't have a retest. I kind of just took it off this 10 a.m. candle. I waited for the 10 a.m. candle. I had to have a little bit of a pullback just into this big candle. Took the trade with a market execution, not so much a break and retest. Like I said, personally, I did love the area of interest. As you can see, we had a bunch of touch points right here. We had this low that was put in. We respected this low right here from there. Then we broke above. There wasn't a retest, so I am glad that I got a market execution order. It's one of those things where when I see this much volume pushing, I am more interested in just kind of getting into the move, especially when this is a confirmation entry off the real entry that was supposed to be right here. So a little bit more of an advanced move from my part, just on the side of getting my actual entry on this. You know, as you can see, we did have that pullback, but not to that 50% of the area of interest. Again, like I said, more advanced entry versus right here. This was the cleanest setup for you guys to take. The only thing is you would have to have used a little bit of discretion for that SL placement. Personally, I do just like having that extra bit of confirmation, and I had a clean low that was protected that I could place my SL at, and that made me even more confident in the trade. And as you can see, we pushed right off of it, continued up. I went break even at this high right here, which would have been the high to the left right here that we obviously made from breaking this area of interest. So this is a great point to go break even on the trade. That's about 50% of the way, just over 50% of the way through the trade itself. So this is a very clean area to go break even, because if it is coming back from this point to my entry price, I don't want to be involved in the move anymore. And obviously the TP is right up there. And the important lesson here is the edge wasn't the entry here. The edge was the bias itself. You know, macro supported this, headline supported it, data supported it. The chart did not create the trade. The chart just confirmed it and showed me where to get involved in the position. And this is how I'll continue trading gold in macro setups. You know, I start with my headlines, I confirm it with the data, I wait for structure to show me where to enter, and I execute only when everything aligns. Because if one piece is missing, I honestly do not trade. There's always going to be another opportunity. So to summarize this, gold worked because the macro risk increased, data confirmed the slowing growth, and the structure gave me permission to enter this trade. And honestly, patience just did the rest. This wasn't prediction, this was alignment through a whole whack of macro and headlines and data. And this is how you can take these macro-driven swing setups. You know, you're not forcing trades, you're not guessing headlines. I'm just letting the market tell me when risk makes sense and where I'm targeting. So we're going to keep building on this process going forward. If you guys have any comments, definitely leave it below with any questions. And with that, we'll see you guys in the next video. If you enjoyed, make sure to leave a like and subscribe.